Welcome back to the Independent Investor Channel. We're going to drop you into the taxable brokerage account. This is a joint account that I own that's been newly reestablished after this recent downturn that we've had in the stock market. We were able to leverage some trading profit that we have, as well as put some new capital to work in these. The strategic emphasis on this portfolio is dividend growth. You'll see how I've sought out my exposure in these holdings. I've added a few since the last update to this, and we'll continue to add to this as we start to establish this account and get some dividends rolling in. So with that, guys, we're going to kick you into the account and conduct the review. Please enjoy.
All right, super cool, man. Thought we'd have a cup of coffee and do a little portfolio review for you guys. I know you guys appreciate these periodic updates to the portfolio. What we're looking at here is one of three. This is the taxable variety. This is an account that's been newly established over the recent volatility. I have traded pretty aggressively in this. There will be some tax implication over this account. That's totally fine. We'll file those taxes as a joint couple as earnings. So not too worried about that. We've got money put aside to do that. But nonetheless, some of these positions have been established on the back of some pretty awesome house money. I can't tell you how much, but it's been pretty awesome. And this is how the account has settled out. And couple strategic goals here. I know some people have got angry with me for calling this a dividend portfolio. So please look at this as two portfolios in one, if you would be so kind. Obviously, we'll omit the non-dividend paying stocks from this review. That way I don't get tomatoes thrown at me for providing such transparency. So we'll talk about the growth up front, the Amazon share here. Amazon's just been on fire. And then Facebook and Google. So imagine for a second that those are not part of this, and I'll be careful not to name this video a dividend portfolio review. Also, please take in mind that this is taxable, and this is one of my three larger accounts. So this is just about a third of the larger accounts that we're looking at, each of which have about 100,000. And so we'll see what happens with this going forward. So we've built this up just shy of 100. We briefly went over 100,000 yesterday in the account. So pretty good news there. And we'll continue to get these positions established in the account. But top line holding, largest holding in my portfolio is Apple Computer, largest single stock holding, I might add. So Apple Computers logs in at 25 shares here. We've taken profits in Apple as well. So just please realize there that these are extremely long positions, and I wanted to hold those in the taxable account here. We'll skip over Amazon and we'll jump right to Broadcom. This is a 10-share position that we've enjoyed the newly minted dividend that's been paid. I featured this obviously on the weekly dividend payout for this week. So very cool stuff. Right below that, Bank of America. Financials have just been clobbered after the stress test. That's totally fine. For you guys that are looking for some financial entries here, now's probably a fairly opportune time. Again, my pain is your gain. If you'd like to look at financials right here and take an entry, I think they're favorable. I really do. I think you could pick any of the majors here. I've got pretty good positions in most of the majors. As you'll see, a couple declared in here. Bristol Myers here on balance sheet, phenomenal moneymaker, traded around this position many times, and it's settled out at 50 shares. So we'll start to establish the position now going forward long, right? So during the volatility, I was able to render profit, and then roll some of that profit back into some of these. So anyway, so good news on Bristol Myers, and right below in the same space, healthcare CVS. Great company. I've also traded in this many times, and here it's settled out at 50 and change. And then right below that, Duke Energy, which was part of my stocks to buy, dividend stocks. And for those of you who paid attention to that entry call on both Duke and Southern Company would have realized how incredible of an entry that was. Both of these are off for me, obviously, because I've rode them down on the volatility wave. But you can obviously see here that we're starting the dividend growth journey with both of these great utilities. We'll skip over Facebook. I'm not going to talk about it, but one of those positions that I've traded in and out of, taken some killer profits. It was down, I think, 2 days for some headline news, and now it just is back up again. So Facebook will own long there, 10 shares as a base. The defensive sector, General Dynamics, that was one of the small strategic goals of this, is to add some defense industrials into this, as I own main industrial in the Roths with 3M and Caterpillar respectively. So I think we've met that goal here with General Dynamic and Lockheed Martin as well. I may again look to add this RTX position in here, but I haven't decided what I want to do with that. We'll kind of see how some of these more speculative plays play out in producing some nice profit for me. That way I can establish some new value plays with house money, and we'll live to fight another day. Goldman Sachs, again, the second representative of financials, just a great entry on Goldman. I think here, I think we're going to look back on this as a real entry opportunity for Goldman Sachs, and nice dividend payer. Dow component to boot here. Another Dow component right below it is IBM. You guys know I've been very bullish on this name, and I really think that this is set to fly. This is really going to be very well. In the meantime, it's a great dividend payer at about a 4% clip, I believe, is the yield right now on IBM. So good stuff there. LCA is the SPAC for the acquisition merger of Golden Nugget. This is the Fertitta SPAC. Actually, he basically just financed the deal himself. Why not? You don't have to merge with your own. He basically just created his own blank check company and is taking this to submission with the SEC for the merger of Golden Nugget Online Gaming Casino Holdings, and this is the SPAC that's going to be looking to do that. So we'll track this going forward here, 200 share position in that SPAC, and I'll keep you updated. I hold nothing back. I did hold something back on the live stream that I'll declare to you today, which is my actual holding in Tortoise, which is Hyliion company, Tortoise being the shell company, the blank check company as well, but 400 shares there, up nicely in that, but this is just the beginning for this company here at 27 at the time of this video. We'll continue to track that. Going forward, Medtronic in healthcare, MetLife in financials, more specifically insurers, which was kind of another hybrid strategy within this, is to get me some exposure not only to the defense sector and industrials, but also to branch out a little bit and put a couple insurers in here that I believed in, MetLife being the one, ticker symbol MET, and Travelers down here at the bottom, another Dow component. So it'll be fun to track those going forward. Microsoft here at 25 shares, a nice big position in Microsoft here. These are long positions in big tech. Pfizer as well in healthcare. For you guys that understood why I recommended that, I caught some heat for it, like I usually do for all of my value plays, because it had underperformed the market for 6 months, and therefore I shouldn't have been bringing attention to Pfizer. However, I looked at it with a different lens. I looked at it like this great quality 4% dividend yielder was providing a nice entry on a 52-week basis. So that was my analysis, and quite frankly, I was right. So Philip Morris here, ticker symbol PM, and in that space, we're down a little bit there, but I was looking for some dividend exposure in Philip Morris, and it fit nicely into this portfolio. Obviously, RTX is a partial position, so we won't talk too much about that. And rounding out the portfolio review, how at the bottom here is AT&T, rather large position at 125. My largest, I've stepped up into this position. My very first position in AT&T, back when it was trading at, I think, $22, $21 a share, some many moons ago, was a 10-share position. So I'm just ecstatic to be sitting here declaring to a YouTube audience of loyal subscribers 125 share position in AT&T, the telecom communications sector. So with that, guys, I really hope you appreciate the review here, and we'll continue to roll these out on a consistent basis for you guys to keep you informed about how the portfolio is progressing. Guys, thank you so much. We'll kick you back to YouTube to conclude the video.
All right, guys, so we've come out of the taxable brokerage account. This is a joint account that's owned between me and my spouse. This is one that has been newly established, and this is in addition to the Roth accounts that we have. This has been as a result of the recent downturn. I felt like it was a good opportunity to put some new capital to work. We've done that, and this is the resulting result of that new capital being put to work. I hope you guys appreciate, and if you like more videos like this, you want to make sure and subscribe to the channel. Leave your comments at the bottom of this video. Leave your stock picks in the thread. I know there's a lot of people that review that and find value in it. And if there's people out there that you know can benefit from my message, getting a little bit more of a preliminary introduction to what's possible in investing and an introduction to the stock market, bring them on to the channel. We welcome everybody. It's an open door policy on the Independent Investor channel. Guys, thank you so much for tuning into the message, and good luck in your investment future.